Thank you guys for joining us. And before we dive into the questions, I want to kind of set the stage a little bit and talk about kind of the foundational things. DeFi has been growing, and it's been a thing for the last 5 years now. And we kind of are starting to realize how we need to compete against TradFi. And I think that is the kind of conversation here of like, why is speed important, in financial applications, generally speaking, compared to like other apps like Facebook or social media or something like that?
Sure. I guess I'll kick it off. So I guess the main two reasons are, number one, if crypto and like blockchain and Web3 in general hopes to displace a lot of the TradFi applications and kind of replace some of the major use cases, it has to be a cut above and it has to be an order of magnitude better. It can't be just the same speed as TradFi or like just a little bit better. It's got to be significantly better, number one. And then I think number two, just more like on the DeFi and crypto focused side, people are used to like fast executing transactions now. So it has to like at least maintain that bar or be a little bit better.
I think when we talk about the concept of speed within a financial application, there's a lot of parts that people don't actually realize when we talk about speed. First, there are actually a lot of risks when you actually use a financial application, right? You have things such as counterparty credit risk, right? Mm-hmm. The longer a transaction takes, the more worried you get on the other side of it. There's another aspect of this which we call technically capital efficiency. If the transaction hasn't gone through, let's say a credit card takes 2 to 4 days to process a payment, well, that person, for instance, has to wait 2 to 4 days. So there are certain nuances where I believe there is that element where the speed will bring about benefits. But the interesting thing, and maybe to your initial opening, is it really about DeFi versus CeFi when it comes to TradFi? I can't really get on board with that narrative. I think it will be a hybrid model. I think it will be a blend, because there are benefits, once again, of that nature of CeFi as well when it comes to things like this.
That's interesting you point that out. I want to come back to that a little bit later, but first I want to talk about your point of 10 times. You want to be 10 times faster than CeFi or centralized entities. How is that possible? Is it premise of decentralization that it has to be a little bit slower for communication?
Yeah, I think the reality is we're in this like weird limbo period now where crypto's been around for 15 years now, right, or something like that. Like Bitcoin white paper came out in, I guess, 2009 or whatever. And so we had this initial phase of like proof of work chains that came out, and more recently we moved to proof of stake. And there's this kind of like 3-factor equation that needs to be balanced with decentralization, security, and performance, mm-hmm. right? So if you look at like the Bitcoin blockchain, it's very decentralized, right? It's not very performant, but there's a lot of security, right? And so with, for example, what you guys are doing with Sui and what other high performance chains like Solana and Aptos and others are doing, they're not necessarily sacrificing security, but they're focused a lot more on performance, on throughput, on TPS, and all that sort of stuff. And this allows for this kind of like next level, next generation of applications to come to life. So, there's no good way I think, to kind of manage these three things. But ultimately, you have to balance out security, performance, and scalability. And so, we're not there yet. I think eventually over time we'll get there, but we're kind of in this like weird limbo period for now.
Yeah, I think it's really interesting how we're kind of coming up with new ways of trying to solve that exact problem, and hopefully with that becomes a trend, and we can get more creative with some of these solutions. Back on the hybrid approach, I'm curious. Do you think it's going to be CeFi serves some purpose, and then DeFi serves a different purpose, or are they going to be kind of together serving a new kind of a purpose that doesn't exist now?
So, interesting enough, the panel concept behind this, future of finance, you can look at it at almost two levels, right? On one hand, you have the institutional level, and on one hand, which is more B2B, and on one hand, you have more B2C. Now, on the B2B level, there is a bifurcation in the market, right? And part of the reason is that side of the market, transparently, we are not concerned about speed more than we are the basics of KYC, AML, and regulatory frameworks in place. But that element of B2C, let's say the apps that you see, shopping apps, transference, basic bank apps, that's where you're going to see that hybrid, I feel, where on a UI UX level, on certain storage of certain information, it will be on a centralized basis. But in terms of the throughput processing, that's where I think DeFi will come into its own.
A little bit about scalability. You mentioned kind of trade-offs a little bit earlier, but I want to kind of talk about trends. You know, you guys are veterans in the space. You know, I know super bullish Solana right here. Like, what kind of trends are you guys seeing in all L1s? Are they solving the right problems, and what more do you want to see going into the future with these?
Yeah, so I think in this cycle, there's not a ton of, you know, quote unquote innovation at the L1 level. You know, you have kind of, I think, three main ecosystems right now that are competing on the high throughput side. So Solana, Sui, and Aptos. And then to a lesser degree, you have some of these newer players that are coming to market with like Mysten Labs, and you know, you have like Mega ETH, right, which is mostly centralized, and a few other things. So at the L1 level, there's not. Oh, sorry, back up. The only two others that are kind of worth mentioning are Monad and Berachain, and I think those guys have done a very good job of, at the base level, just cultivating a very, very rabid community. Obviously, there's no products yet. Berachain has a testnet. Monad's going to launch theirs soon. They're both going to be coming to market and launching their mainnets in the next 3 to 6 months. So yet to be determined whether those actually succeed at a large scale. But generally speaking, at the L1 level, there's nothing like super new. People are still competing on kind of the same parameters and same levels, right? It's mostly like mine is faster, mine is a better community, we have more memes, blah blah blah, right? So like there's not a ton of new angles for people to compete on, and you know, I would say this cycle particularly has been interesting in that a lot of the L2s have been fighting with each other and with the L1s, right? So like all the ETH L2s, right? Like all the OP stack chains, the Arbitrum chains, like all the ETH aligned, let's say, community is kind of taking the spotlight for the most part. But you know, yet to be determined if anything new this cycle really kind of pushes forward on the L1 level. So we'll see, but I'm excited for some of the ones that I mentioned.
I'll look at it from a different way, because he's covered the tech aspect, which I agree with, right? That's the birth of layer 2s. And I agree, they're fighting like children around the table right now, trying to see who's better. And the funny thing is, the fundamental narrative, though, needs to change. The problem with crypto, and this is something that, as a veteran per se, and we've been around for a couple of years, crypto has always had that mindset of how do I bring 1 billion Web 2 users into Web 3?
Yeah.
It doesn't work. You can poll the audience right now. If each of you right now take out your phone and open up your top 5 used apps that you use on a daily basis, how many are true Web 3 apps? Ask yourself that question, and you've probably figured out the answer. I think the trend that's happening now is the approach to strategy.
Okay.
And when I say this, what I mean is what we're seeing is, what does crypto really have within the Web3 space? We are very, very long product. And we are getting longer product by the end of the year with Monad, Berachain. We're going to be extremely long product on one end of the scale. The other part that we're going to start seeing is, well, ask yourself this, who is long distribution? And that's where I think what we will see as a trend, and we are starting to see this in the Asian landscape, is a lot more conglomerates and institutions who are based in Web 2, who have very long distribution chains, are going to start reaching out to some of these chains and say, look, I have people, I have product there, but my product is not as efficient. What if I were to plug you in? How does that look? And I think that will be the true test. Because we always talk about scalability, right? And we always do transact TPMS, TPS, etc. But the interesting thing is, have we really tested it in a day-to-day use case environment? That is going to be the key going forward.
I think that's such a good point of distribution. I think we're kind of seeing some trends there, like Telegram, they built the distribution, then the blockchain. Recently, Sony, they have the distribution, now they're building the blockchain. And I think it's exciting to see, you know, what comes out of that. And that is novel, as you said. That is a completely new strategy. And hopefully we'll see what we learn from there. I want to talk about, just briefly, you mentioned EVM and all L1s. I feel like, you know, they're like two separate camps. Like, you're either an EVM person or, you know, an all L1 person.
Yep.
What is happening there? Do you think it's eventually they all will become like one big group, or like is it always going to be that divide?
No, there's all, in my opinion, and from what I've seen across several cycles, this is like my fourth or fifth. You know, the reality is like there's this tendency to bifurcate into tribes, and this is just like a natural human tendency, and like there's no amount of engineering that's going to avoid that. And you know, if you look at how the tribes have divided now, like the EVM tribes are absolutely, you know, categorically the dominant tribe because they were the first movers. They have the most amount of capital. There's the most amount of Solidity developers. They have the most amount of TVL. And so they're like the entrenched incumbents. However, there's a reason why this narrative of, oh, like ETH sucks, and I don't subscribe to this, but a lot, like if you read on the timeline on Twitter, like ETH sucks, it's a shitty asset, blah blah blah. Like why isn't it accruing value, right? And part of the reason is because ETH has this like ivory tower intellectualization problem where a lot of the high priests just sit around and they just like muse about technical solutions to things that like we don't care about, and certainly the regular consumer does definitely not care about. And so they're sitting there doing their like PhD analysis of stuff. Meanwhile, you know, the L2s are actually doing stuff. The L1 is like, it's just there, versus what's going on here, right? And what's going on in other ecosystems is like, people are actually like, there's less talk, there's more like, hey, let's try shit. Let's do this, let's build this, right? Let's experiment, we have more throughput, we have more capabilities, And so I think the difference is like, there's a lot of this like entrenched philosophy and thinking and less execution, and more like just musing about things versus like people are trying things on chain. And is it going to work? I don't know. Maybe, maybe not. Some things are obviously working. Like Solana's crushing the cycle. Like there's been a lot of like runaway successes with, you know, Pump Fund and meme coins and whatever.
Yeah.
You know, and Squeeze, you know, you guys have hit, you know, your highest TVL kind of metrics recently, which is great. And obviously looking forward to what's coming out next. But like, that's the divide in my mind.
I agree. I think that reminds me of a tweet from Vitalik recently where he said like, I've been doing too much philosophy lately, and somebody told me I gotta
write bull posting.
Bull posting. Yeah, that was funny.
Yeah.
So briefly, once again, like I want to kind of talk about. I feel like in DeFi, initially at least, we wanted to have alternatives to TradFi applications. Do we think, is that still the path forward? Like, do we really want to compete? I mean, on a high frequency level, like on like an actual like exchanges and things like that, can we really compete against, you know, for example, you know, low latency trading, centralized trading platforms? Is that a thing that we should even think about, or should we kind of more focus on user level, like kind of application level?
This has so many binomial trees you can go along in terms of the path. I could probably go on for about 50 minutes about this. Maybe I'll break it down another way, right? And maybe I'll break it down to the more TradFi versus DeFi nature. I think that's the easiest way to look at it.
Yeah.
I think they're for different purposes, fundamentally.
Different purposes.
What is DeFi, fundamentally? When DeFi Summer hit, everybody in DeFi Summer, and I still remember the chanting on the street, I felt like being back during my days when Lehman was going down, and the wolves were at the gate with the sticks and pitchforks, and DeFi Summer was all about, yeah, this is the end of the centralized institution, it's not going to work. But DeFi fundamentally, it provides access. That's what it's meant to do. Like, I know what we do. We always talk about transparency, the speed, etc., the immutability of it, but it's access. The fact of the matter is, if you go to the biggest trading shops in the street, the biggest banks in the street, they won't use DeFi for a different reason. And that is, once again, KYC and AML. The TradFi system is a system where we can improve the efficiency within it, but to truly have an impact on something like that, it is almost down to the regulatory frameworks that we adopt. So to that point, would you look at TradFi and DeFi as an apples and orange comparison? I'd go as far as saying you're comparing an apple to a chicken. It's a completely different food group. And I think if we understand that and work towards that, what we will end up with is a much healthier DeFi ecosystem that understands that where DeFi's place is that last mile, is that access sort of logic.
Access. Yeah. That's a really good way to think about it.
I want to touch on this too before we move on. I really like that analogy, apples to chickens. But you're right. I agree. It's purely use case dependent, and I think this idea that we should like blanket compete with everything in TradFi, it's just silly because, first of all, it's silly and it's arrogant to assume that you could even do that. But like, there's plenty of people in TradFi that are never going to move on chain, and that's fine. And like, you don't need to serve that customer segment, and that's okay. But like, for example, I spent some time in Florida this year, and like, I'm originally from Toronto. I spent some time in Florida, and like, once you get there, you have to figure out ways to like kind of like move money around quickly to people locally. And back in Toronto, we have like an e-transfer network for Canadian banks. In Florida, they have like Zelle and Venmo and shit, which I can't get access to because I have a Canadian iPhone. And so I basically just like send people stable coins. And now there's a lot of apps coming online that allow you to do that regardless of what your jurisdiction is and like where you're based, without any of these restrictions. And like, that's another angle. So like, payments, 100%. Everyone talks about payments, crypto payments, Like, now it's actually happening. It's been coming online the last few years, but now like the scalability, performance, and the UX of some of these payment apps is terrific. And like, there's a good angle, right? Like, obviously tokenization of certain things, like bond issuance, all this sort of stuff. Yes, we can compete on that, but like, I don't think we should be competing with TradFi on everything.
I fully agree.
That's
on the payments thing, those of you who are out of town using Grab accepts PYUSD right now. So I heard it saved quite a few people at the airport.
Yeah, exactly.
Speaking of access and users and, bringing this to, basically users, before there was an issue with, blockchains were too slow, so the user experience was not that great. Now, blockchains are pretty fast. Like, Sui is pretty fast, as we just saw, 500 millisecond finality. Are we there? Do we need any more speed than this? Like, I mean, from a user perspective, maybe we've kind of reached, or should we go further, become even faster?
Yeah, like, listen, I think ultimately everyone's always going to push the boundaries, and it's unavoidable, and to some degree it's great. Obviously, this needs to be manageable and scalable and, secure, like we talked about earlier in the conversation. And, like, there's going to be probably in 5-10 years, some chain is going to hit like 20,000, TPS, or 50,000 and 100 millisecond finality. It's inevitable. It's going to, like, that will happen. It's just a question of, is it 2 years, 5 years, 10 years from now? I think the more interesting question is, like, what are people going to do with this, right? Who's going to build, right? Like, my favorite thing in like trying to compare these ecosystems is, everyone loves to, like, the first headline is like X thousands of TPS. Okay, cool. Like, how many builders did you attract? How many applications are building? How many projects have you incubated? Like, those are the real metrics that matter. And so at Douro Labs and at Pith, we speak to a lot of L1 projects, L2 projects, L3s, the apps, like all across the board. So we have a very good view into who's building what and where. And at the L1 and L2 ecosystem level, I can tell you, as someone who speaks to these foundations and chains, and we obviously have a good relationship with you guys and love working with you, but everyone's competing for the same finite resources, and that's developers. And if, just as a side tangent, go read the Electric Capital developer report, and you'll see just how small the ecosystem is. It's like 20,000 developers globally or something like that for all of crypto. So like, I think the real question is, what are you building? How many more builders are you attracting? And how is that going to be interesting for the future?
I mean, maybe just to add on, I think the other question that we need to ask is, how are you going to build trust? I know this sounds really ironic, right? You're building technically a trustless ecosystem. But the fact of the matter is, there is a reason why the man on the street still trusts his banking app from his bank. It's years. You're not going to, to your point, and I agree, you're not going to replace that. So yes, we can be like kids in a playroom and work on getting it faster, more efficient, etc. But once again, this goes back to it. To what end? Right, you're going to get there, you're going to pat yourself on the back and say, yes, I now have the fastest chain in crypto. Great.
We did it.
How are you going to make money now? Like, what is the revenue going to come from?
Yeah.
So, and I think that is what we're going to start fighting over. That is where the competition is really going to heat up.
Yeah.
Okay. Fighting for a limited number of resources, which are the builders. What do we need to get more builders? Is it money? Is it like, do we need like a new liquidity, or is it like in more interesting technology? Like what?
Yeah, like there's no easy answer to this. So like, I don't want people to think that there's like some boxes you check off and like, oh, suddenly all the developers are here. Like, this is like an age-old question, whether you're trying to attract builders in Web 2 or Web 3 or like whatever you're trying to do. Like, there's a social aspect, there's like a cultural component, there's like a technology component, there's a finance component, there's a cool component, right? And like, ultimately what you're asking people to do is you're asking them to sacrifice their time to work on this thing that will hopefully have a payoff some point in the future, and there's no guarantee, right? Like, you're asking people to take a bet and a gamble on your ecosystem. And by the way, there's, if you've been here long enough, there's plenty of ecosystems that failed, right? Remember EOS?
Oh yeah.
And not to, like, I'm not singling anyone out, but like EOS, Algorand, Stellar, plenty of these ecosystems, and no disrespect, it's just like they were around for a while, they raised a shitload of money, they didn't figure out what to do with it, they didn't attract builders, and now they're like ghost chains where they have a big treasury, and then they just go around to conferences, sponsor things, and nothing happens, right? And again, no disrespect, that's just what it is, right? Like, we have a track record of ecosystems that tried and failed, so like, what are you gonna do differently? And I think the cultural component and the social component are very, very important, and that's why I think Berachain and Monad, just to give them their flowers, I think they're doing a good job, but that also has to translate to tech. So that would be my kind of short answer to that.
Finally, let's just think about like long term. I know we talked a little bit about long term, like we'll have much better transaction speeds and everything. How bullish are you guys? Maybe we should.
Wow, you asked the capital markets guy where I think the price would be, and I probably won't go down that path. I think I'm bullish in terms of the maturation I'm seeing in the builders in the space.
Yeah.
What I'm not bullish in is people bringing, 20,000 condoms through Changi and getting confiscated on the spot.
Everyone knows no one gets laid at a crypto conference. So.
Yeah, and that's the worst thing. Like I say this as, I think there are organizations within crypto and Web3, and I put GSR as one of them, where you have to be the adult in the room. And you have to understand that we are right now playing in a global sandbox, but it is still just that, a sandbox.
Yeah.
And I think the next bull market per se comes from the fact when we realize that the world is much bigger than what we're playing around with here. Like, if you look around here, how many people within this conference are from Web 2? Pretty much everyone's Web 3.
Yeah.
That tells you everything, right?
Yeah.
And during the bear market in 2022, 2023, literally it was Web 3 guys sitting around a campfire, hands in each other's pockets, singing Kumbaya, saying we're going to be better.
Yeah.
Now's that time. And I think we're getting there. I mean, the ETF launches, that was the first step. It showed that there is a pathway to recognition of legitimacy. It is up to us to bring it forward. And I think as we start building apps that people need, rather than solving problems in our heads, that is where we will start pushing forward to attracting adoption, and more importantly, interest and trust.
Yeah.
So last thing I'll say on this, because I know we're going to wrap up, but like, I see people on the timeline, especially like, some veterans and some like older accounts, and a lot of people, like, they're rage quitting. They're like, nothing's been done. Like, we haven't achieved anything. We're just creating, various Ponzi's, blah, blah, blah. And like, there's definitely some truth in that. There's for sure still a ton of bad actors and, people supporting projects that are extractive and net negative to the broader ecosystem. But like, I think to a degree, you're never going to be able to get rid of that, because that's the nature of permissionless technology. People are, like, you can't police everything. People are going to build things you don't like, and you're going to have to deal with it. However, I think the responsibility is in like the things that we do support, the things that we elevate, and you're right. Like with all the ETFs coming and the institutions are here, right? Like it's gonna raise the bar a little bit on what the expectations are, and hopefully next year when we're sitting here, we'll have a different conversation.
Agreed.
Thank you. Awesome. Thank you guys again for this great conversation. I know we kind of went a little bit off tangent sometimes, but really enjoyed picking your guys' brains.
Yeah, thank you for having us.
Well, thanks guys.
Thank you.